We found an unusual trade worth nearly $1 million on Uber Technologies stock, ticker symbol UBER, on the last trading day, Friday, November 29th. And so in this video, we will analyze this unusual option activity to find out how this wealthy investor is now trading Uber. Is their trade bullish and buying or bearish and selling, so that we can also trade in the same direction to make money while the rich are getting richer on Wall Street? Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into this analysis. Now, as you can see here, if we pull a Fibonacci retracements on the charts from its 52-week low over here to its 52-week high, we can see that Uber is currently trading very close to its 50% Fibonacci retracement level. And so, will the stock go up or down from here? Well, let's find out based on the data, because that is what we do on this channel. We follow the data to make our trading decisions, not only technical analysis of the charts, because we need more data to confirm our decision making, especially the trades of wealthy investors, because that's where all the money is, the flow of options. And we can see here on November 29th, Friday at 11:58, 59-second mark, the February 21st options at the 77.5 strike calls were being traded, 2,900 contracts, and they paid a price of $330 for each of these call options. And we know that $330 is actually $330 because we have to multiply by 100 to get the price, because this is options pricing. Each option represents 100 shares of stock. And so each of these call options costs $330, and we multiply by the number of contracts that they traded, 2,900, and we get a total trade cost of $957,000, nearly $1 million. And so if you've been following our channel, you know that when the trades exceed into the millions, they are typically higher probability of profit. And so if you want access to better trade ideas, then make sure to go to our website where we share these higher probability of profit trades with higher quality stock picks based on $1 million trades, not like this one here. We'll put a link to our website up here where you can learn more, because not all of these trades will be profitable. Even this one might be a loss. But as long as we diversify and use option strategies that we share on our website, where the risk to reward is always in our favor, then we can become profitable in the long term. So check out our website if you want access to trades that exceed into the millions, where those investors have a lot more skin in the game for whatever reason, because maybe they know something is about to happen to the stock. Having said this, this trade is still unusual. And we know these are new trades. They are not closing out of these trades, because if they were closing out of these trades, then we don't follow those trades. And so in order to confirm that these trades were opening new trades, we have to look at the historical data. And we can see that on Friday, on November 29th, when this trade was made, we can see for the February 21st options at the 77.5 strike calls, right over here, the open interest was 2,248. And we can see at the volume here, those 2,900 that were being traded. And so if these trades were new opening trades, then the open interest would have increased the next day. And we can see that now the new data for these February 21st options at the 77.5 strike calls have indeed increased to 5,152 open interests. So we know those 2,900 have added to the previous open interest, and so these are opening trades. And that is why we followed the same unusual options with our position here. POS stands for position. Green means buy, where we also bought these 77.5 strike calls for 330 each. And so when we analyze this trade, we can see here that as the share price goes up, it's currently trading right here, and the x-axis represents the share price. If it goes up, these options become more positive profitable. And if it goes down from where it currently is trading, more negative loss, because this is a long bullish trade. And we can see from the Greeks that it has a positive delta, which further confirms that this investor is going long bullish on Uber. But keep in mind, this trade is risky. You can see the theta of -3. So there is time decay on this trade, and that is why the break even shifts up to about $80.80 per share that Uber has to cross above by expiration, which is represented by the blue line here, for it to start to become profitable. You can see here, this line meets the zero profit loss break even line. So anything above that is profit, anything below it is a loss. Okay, so keep that in mind. There's risk on this trade. And so that is why we use position sizing to manage our risk, but we typically use option strategies to increase our chance of profit when we trade the unusual option activity that exceed millions of dollars, not like this one here. And so if you want to learn more about how we trade to beat the market consistently, then make sure to go to our website. We'll put a link up here. Let us know in the comments below, what do you think will happen to Uber? Will it go up or will it crash down? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.